Good day, everyone. Let's talk about the next thing in our curriculum. So the next thing in our curriculum we're going to talk about is imbalance. Okay, so I'm sure most of you, if not most of you, then some of you have heard the term imbalance, inefficient price action, inflation protected annuity, IPA, stuff like that. You get it? It's quite simple, or FVG, fair value gap. Okay, all those things just mean that the market is imbalanced. It's showing the sign that the market is not efficiently priced. What the market thrives for every single time is efficiency. So anytime that the market is trading, the market is striving to be in an efficient marketplace. Okay, so if you like, you can look at chart history, you can look at chart data. Most markets strive for efficiency because inefficiency is not a great condition for the market. Like any other thing, the market also strives to be efficient. So when we're talking about inefficient price action, let me try and show you guys with these examples on the charts. So for those who remember our lesson on order blocks, let's focus on the order blocks we have here. Okay, so this is going to be the first bullish order block in this zone. Let me change the color to somewhere white. So this is going to be our first. No, white is not so visible. This is going to be our first bullish order block. Okay, now when we look at what happened with this particular bullish order block, do we see that when price decided to move all the way up here, okay, price did this so fast. And if you look at the wick, okay, remember when I was explaining the candles, we said each candle is going to have a body and a wick. Okay, it's not all the time that the candle has wicks. Sometimes the candle has only wicks and maybe a little body. Sometimes the candle has a lot of body and sometimes no wicks or little wicks. Okay, we would explain all that later. But then just look at these series of 3 candles. Okay, to identify inefficiency, we usually need 3 candles. So when you look at these 3 candles, you can see that the wick of this, the bullish order block, okay, and the wick of the next candle that traded after this whole push was done to the upside, there's this whole space in between them. Let me try and show you guys this. Just excuse me for a bit. I'll change this quickly. Okay, so we can see that we have this wick. Okay, that was the wick of the bullish order block, this particular one. And then the next candle's wick that traded into it, you can see that we have this huge gap. Okay, for a market to be efficient, for us to consider this particular market efficient, let me show you what we would have considered. We would have considered something like this, where if we look at, let me label these candles as 1, 2, 3. Okay, so where if we look at candle 1, candle 2 and candle 3, we do not see any space in between them. Like right here, this has tapped all the way into the wick of candle 1. Okay, let me try my best and then label these candles. 1, 2, 3. Just give me a quick minute. 1 here, 2 right here, and then 3. Let me do this for the same. This is going to be candle 1, candle 2, and candle 3. Okay, so candle 1, candle 3, those wicks are going to be our focus. Okay, even if the body comes all the way down here to touch it, it's fine, but most of the time we'll have the wicks doing it. So once you see a space, okay, in between that of the bullish order block, which is going to be candle 1, and that of candle 3, even here we can consider this area as an imbalance. Okay, as a fair value gap. The term fair value gap was coined by Michael Huddleston, popularly known as ICT. So it's not my term and I'm just borrowing it for the sake of this. but it's been called imbalance for a long time now. Okay, the market has been imbalanced at this particular point. Okay, some people also term it as inefficient price action, IPA. Some people also term it as inflation protected annuity. Whatever it is they want to call it, the concept is the same, that at the time the market was not balanced. So we have, let's say, between candle 1 and candle 3, there is this particular space which was caused by this explosive push to the upside. You get? So for this particular market to be efficient, we need the next candle or any candle to open and then tap in at least this zone or below it. Are we making sense? So this would be considered an efficient market. But once it's not efficient, we have it something even like this. It's not an efficient market, okay? Or even all the way down like this, did not touch. It's not efficient. So you can still be pulling this particular order block depending on your trading strategy, which we're going to learn further. Was that strategies are only a part of understanding the market. Okay, understanding the market is the best perspective, so that you can know when to use whatever strategy it is that you want to use if you understand how the market wants to move. Okay, so this is an example of a bullish imbalance. Now let me show you for the flip side of things. So here, let's see, can you guys help me identify the imbalance between candle 1 and candle 3? Okay, I think we've all found it, which is going to be here. Okay, so I'm just using the fib for illustrative purposes. There's nothing. You can use the rectangle, you can use any other tool you like, okay, just to mark up your imbalances. I'm just showing you because the fib allows that clear background. So between the wick of candle 1, okay, then we have an explosive push that pushes through candle 1, making this a bearish order block. The third candle that pops in should actually be touching this area for us to say that this market is efficient. If it doesn't, this is an inefficient market. Okay, so the purpose of this particular video is just to show you what the IPA, which is the imbalance or the fair value gap, or FVG, looks like. It's not to show you how to use it and when to use it and stuff. This is just to show you how it looks like. In upcoming videos, I'm going to start teaching you certain, should I call them strategies, okay? Because most of you are having itchy hands. You want to place a trade on your demo accounts, which I would advise, okay? For now, calm down. Live markets are not your friend if you are a beginner. Calm down, wait, understand your edge, and then you can go on to the live markets. So some of you are actually itching to place trades, so I'm going to start showing you like minor concepts which you can start using on your intraday perspectives and stuff, so that at least if you are catching one trade here or the other, you'll be motivated to know that, okay, I can actually do this thing. And if you can't do, you know early on. Okay, so in subsequent videos I'll start teaching you guys, so do a bit of revision on everything, on the sessions, on the time, on order blocks, on imbalance, because now we have the most basic concept to start framing a trade idea. So we'll go into that. Okay, so thank you very much for watching this particular video. I'll see you guys in the next. Bye.